Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so today we've got the sales data for halfway through the month of July.
Mm-hmm.
Now this is a market update for the Las Vegas real estate market. And we were doing these monthly, but like 2 months ago we started doing them every 2 weeks because stuff is changing since interest rates have been going up.
Right. And we know that everybody's concerned as to what that's doing to real estate values and real estate inventory in Las Vegas. So we're here to provide you with the information.
Okay. All right. So we're going to start with the Market Action Index. Market Action Index is that it's 0 to 100. 30 is sort of a normal market, is like the normal market where neither a buyer or seller has an advantage. You're probably saying, well, wait, why isn't it at 50? I don't know. We didn't make the chart, but that's Altos Research. That's what they've determined is a normal buyer's market. Historically, we have almost always had a seller's market in Las Vegas. Back before like 2019, when it was more of a normal market, it was 40. Okay, and people were still saying the market was probably overbought and going to crash. But anyway, so it's 55. It was at 90 at one point a year ago. It's dropped down to 55. You can see the trend where it's definitely going back toward more of a normal market. We're going to go to our now the next slide we're going to go to. I've got 2 extra slides that we don't normally have that are very cool. You're going to see this case median list price. Okay, you can see if you look at median list price, that dark green, that dark line, you can see at the very end it's just barely starting to like tip down a little bit, right? That's the median list price. That dashed line is the forward looking. Now what that means is that's just the trend of the direction. It doesn't mean it's going to go up or down by that much. It's just showing the trend of the 7-day average. And as you can see here, the median list prices are starting to drop. Right. Now, this does happen every year about this time, right? It is more pronounced. Why is it more pronounced?
Well, because we had a heck of a run, didn't we?
Okay. There was a heck of a run.
We had a heck of a run. So, it's time for it to go back to normal. And so there's a lot of room for all of this to get back to normal. The other thing is, like Todd said, this is a seasonal thing. We do see the market pulling back this time of year and continuing to do so until the end of the year.
Now, the next slide is going to blow you away. The next slide is the median list price, but it's by market segment. So we have the top quarter, the most expensive homes, and then the 75th, 50th, and 25th percentile of homes. Now, when you look at this, you first of all can see that the top quarter of homes, the price is substantially higher, like much, much higher than even the second quarter. These are much, 2x times higher than even the second quartile. You can also see that the bottom three quarters of the market, you don't see much movement. This thing has just been chugging along. It's the top of the market right now that's basically, and you can see did this last year. It's doing the seasonal haircut, but probably some extra.
Right.
Okay, and how do interest rates affect the top of the market more than the bottom of the market?
So the bottom of the market, it makes it more likely that people who with cash can enter the bottom of the market, purchase rental property, turn around, rent it, particularly with rental prices still being really strong. The top of the market is a little bit more sensitive because you kind of have 2 camps. You have people who are going to just buy cash and they don't care, and you have people who do care and they are financing. So it's a different market than the bottom of the market. The other thing that's happening at the bottom of the market is you've got people who were maybe 1 tier up now cannot no longer afford that 1 tier up house, and now they are purchasing the 1 tier down house. So that's continuing to put pressure on those lower priced homes as far as people purchasing them.
One thing that's interesting that we're not seeing is the number of buyers dropping off. What we're seeing is the number of buyers are just buying less expensive homes. So they're still buying a house or a condo or whatever. They're just, instead of buying the $600,000 one because interest rates went up, they're buying the $500,000 one.
Right.
So the homes on the market, the homes that are lower are on the market less than homes that are higher. Okay. The next thing we're going to show you is the median days on market. Now, median days on market, you can see is still really low. As a matter of fact, it's about what it was last year at this time, 20 days on the market. And Oana, why is this? Because we clearly saw that the prices are starting to come down a little bit, at least list price on the high end. And but why would median days on the market stay so low?
Well, so it's going to stay low for a couple of reasons. One, because this is a lagging indicator,
Okay.
and then the other reason is because people are trying to, if you will, catch the last train out before interest rates go up again, and particularly in the lower price points, they're going out there and they're purchasing these homes.
Okay. Here's another fun one, price per square foot. This is also a lagging indicator, right? Because this is sold.
Right.
Now, when you look at price per square foot, this looks way more tame of a incline than the other ones look like that are more volatile, because remember, price per square foot is the whole market. It's the median price per square foot. And it looks back about how long? About 60 days?
Yeah, sounds about right.
Okay. All right. And this, though, is not really affected if the top of the market gets wiped out, because it's the price per square foot. It's not the total price.
Right. Yeah, so that's why you have to kind of be careful when you're looking at these numbers to understand what exactly they're trying to tell you and what segment of the market they're covering.
Okay. What's really cool is now we have a price per square foot chart that shows all four segments. Now, what's really amazing is the bottom three segments literally are all in that one, like that bottom thing you see. They're the red, the green, and the yellow. They literally look like they're one line. They're all pacing with each other. What really has taken off in Vegas was the top of the market, like that luxury home thing we never had, right? That thing took off, and you can see it's doing its seasonal correction of price per square foot, but most of the data you're seeing where people are reducing their, list price and things like that, is mostly the top of the market, right?
Right.
So let's talk about that, Oana, because within the Las Vegas market, you have sub-markets, right? Because everyone wants to know how the market's doing, but then the answer always is it depends. It depends on what you're looking for. And it's different if you're out there trying to sell a $2 million house versus trying to buy a $200,000 condo. If you're trying to sell a $2 million house, it's probably harder right now, right?
It is. It is. Homes are staying on the market longer. They have fewer showings. Sellers are getting more nervous. Obviously, that's a smaller niche market. I mean, let's face it, not everybody can go out there and purchase a $2 million house. But conversely, lots more people can purchase homes under $400,000.
What if you're trying to sell your $200,000 condo that you lived in or was investment property? Are there still a lot of buyers?
Yep, you're going to do really well. So that inventory is actually pretty low.
Okay, we have those numbers. We're gonna go over them. Okay, all right. So now we're gonna look at inventory. This is obviously a big concern to everybody. This is the inventory chart. You see the two lines: the blue line, which is the actual inventory, and then the dashed line, which is the leading indicator. It measures the change from like week to week, and if it changes faster, it estimates a higher amount. And you can see we're still, now remember, these numbers are from Altos Research. They're just for Las Vegas. Someone was quoting this 9,000 number. We're going to talk about that number and what that is, because that's, we'll go into that, okay? But we're trying to pick a baseline to compare for the changes, because you can't one day look at one number and a week or a month later look at a different number. It's definitely going up. As you can see, this goes up every year at this time, right? In the summer, inventory rises, it gets to a peak, it falls. It's definitely climbing at a faster rate than it was last year. What else?
So, look, this is not unusual. I mean, we've talked about this for a long time. Real estate is cyclical, and this is what it does. We're just returning to a more normal market. This does not mean that the sky is falling. It just means that we're returning to a more normal market. And we would be going in this direction most likely regardless, because of the time of year this is. Last year when this was not quite as it didn't quite go this way is because, remember, we had that whole COVID thing and just everything was kind of topsy-turvy. But things are returning to normal slowly but surely.
Another interesting thing is you can see we're still well below the inventory level from 2019. We're getting back to where we were in inventory level in 2020. The reason why we're doing the videos every 2 weeks is to track this more closely. We do expect this inventory to climb quite a bit between now and November. Oana, what else? There's something else driving the inventory up. Let's use an example. Somebody's moving. They were going to sell and move in October because that was the perfect time for them for whatever reason. They've decided to move that up because they think the market's going to decline or whatever. So tell me about that. How does that affect current inventory now?
Right, so a lot of properties are coming to market that would have come to market maybe within the next 12 months. But they're coming to market now because sellers are afraid that they're going to not get as much for their house in a few months or in a year that they would get today. And so we do see quite a bit of that. And that's normal human nature, the fear of missing out. It's normal, and that's totally fine. We respect their sentiments, and bringing properties to market is a good thing, because what has caused all of this, as far as the rapid price increases, it's been less the buyer demand and more the lack of supply. So bringing properties to market increases the supply, and that makes the market more normal. It gives buyers more choices, and so it's a good situation.
Now we grabbed some numbers. They're actually from the MLS. These are probably the numbers you have been seeing. We're going to show you the numbers, and then we're going to tell you really quick where they came from. So the total is 9183. That's the total number. And when somebody says, well, that's the total number of actual homes in Las Vegas, that's absolutely not the number of homes in Las Vegas. That's the total number in the entire MLS. Now, there are some lazy people out there who basically just go in the MLS and pull all the data and then go, this is how many homes are in Las Vegas. This is not Las Vegas. This is like literally it's Las Vegas. It's Henderson, it's North Las Vegas. It's Boulder City. It's Pahrump. It's Mesquite. It's Laughlin. It's unincorporated areas of Clark County. It's other parts of the state where they happen to have properties listed in our MLS. This is a lot of extra houses that, there's not 9,000 houses in Las Vegas.
Okay, so I want to point out one more thing.
Yeah.
Our MLS even includes Overton. Okay, so it includes such a broad, basically it's Southern Nevada, okay, for our purposes.
Yeah.
So to say that it's Las Vegas is very misleading. So we want to point that out, that it is basically Southern Nevada, which is far greater.
The other thing we want to sort of point out here is this. So we've broken it down by the number of available homes by price. And you can see 982 condos. That's extremely low. We will probably in a week do just a market update on just the condos. So subscribe, notification bell, all that, so you can see the condo video when it comes out. Because that market is substantially hotter than our market, which is still relatively hot historically, but cooling for sure. There's a bunch of manufactured homes, 255 of them, that are generally considered personal property. Okay, what's interesting about this is the number of single-family homes over 750 is 1657. That is an astronomical number historically. There were years we didn't sell 100 homes over that in the, maybe 10 years ago.
Right.
Like 100 a year.
Right, and so you can see by looking at this that when you break it down by price and by type of property, it gives you a better understanding of the market. So you've got this, the biggest section of the market is the 400 to 750. Those are those middle of the road houses, and that's the greatest inventory. And that's kind of where we're going to really focus a little bit and say what's happening with those. Because we know that everybody under 400, they're going to sell because, let's face it, they're the most affordable game in town besides condos and townhouses, right? But those houses that are 400 to 750, those are kind of the area that concern me, because I want to see what's happening with those. Those, I think, are more important than the other ones, because the luxury homes, they're such a new new section of the market for Las Vegas, relatively speaking, that the fact that we have this many and that they're not being absorbed as quickly as the sellers would like, it's not surprising. This is a new market for us, relatively speaking. But it's those houses in the middle that I think we need to keep an eye on.
Juana, what about, so some of the contention that I've had has been that $200,000 houses didn't double in value as much as home builders were building these much more higher end homes, and you have much more higher end homes on the market, making the median appear to change a lot more. And now, because if you have a $200,000 house and you hear out there, or a condo, and you hear that the market's going to fall 10%, your $200,000 house is probably going to go up by 10 grand. Like, it's probably not going to fall 10% because the whole market doesn't move together, right? That's why it's interesting to understand the breakouts. And when you look at these numbers and you see 982 condos and only 1,200 homes under 400,000, let's put this in perspective. In 2009, no, it was 2011. In 2011, 90% of all sales were under 310. Okay. The other thing to put in perspective is in 2006, at the top of the market, that's this number, this 9183. This was 26,000. Okay, before the market crashed, and it was 26,000. But today it would have to be 40,000 to have the same effect, because this was, the city was much smaller 16 years ago. Okay, we've added so much housing inventory that you'd have to have 40,000 houses to basically have the same effect, which is why even the experts are saying, hey, this is not like what happened last time.
No, it's not. So, look, the market is doing what it does every year at this time. Plus, we had this huge run up, and now we're getting back to a normal market. Not a bad thing for buyers. For sellers, look, I know that we all liked our homes appreciating every day, and we kept all going on Zillow or whatever to see how much our home went up in value overnight. But the thing is, I think most of us value stability. So knowing kind of what you can sell your home for, knowing what you can buy a home for, that sort of stability, I think, is something that most of us appreciate.
As we go forward, do these videos, we're going to focus on the segments more, because it is important to see as the market does change, and we are looking at least for the next few months, probably list prices to keep coming down, and probably that price per square foot to start dropping. And then the other thing we're going to look at is what happens with interest rates. That we did have the biggest 1 week drop of interest rates in the last 14 years. They went from 5.8 to 5.3, but they probably will go up and down for a while before they change and do something else. We'll be looking at that. Potential recession that could affect purchases too. Of course, we all know that and you can answer this question, how are those single family homes under 400 and those condos affected by higher interest rates?
They're not. I mean, that's the short answer.
Okay.
They're not, because you still have the cash buyers who can afford these, and then everybody else who was looking in whatever higher price point is now being driven to this lower price point. So the competition for homes under 400,000 is going to remain pretty feverish.
When it gets bad is when the buyers dry up, which hasn't happened yet.
Right.
The buyers are still out there. Logic would go that as the prices go down, buyer demand will pick up, because the market becomes relatively more, people recognize that, and then they get incentivized to come in the market. I think what could be interesting is prices decline a bit, and then mortgage interest rates start falling again.
Well, but
and then how does that affect us long term, knowing because we did a whole video on new home builders that they're building less and less. So we're back in this really crazy cycle of we don't have enough overall homes in the valley.
Right. So where we're seeing, two things, kind of to address the interest rates that you mentioned. I think we can all agree that interest rates are going to keep going up, at least for the foreseeable future. Yeah. So I think that's a given. And as far as new home builders are concerned, the ones that are a little bit nervous right now are the ones that are on the higher end. And traditionally we've only had a couple builders that did high-end homes. I think we had like three or four.
Yeah.
And now all of a sudden everybody was building, $1 million homes. And so they're the ones that are, I think, a little more nervous right now. And they're the ones who are trying to shed their inventory and not get caught with these homes, because, like we said, that's the section of the market that is slowing down the most.
If you are interested in buying or selling a house in Las Vegas, you can reach out to us. Our contact information is in the description. Oana, what if they want to buy or sell a house anywhere in the country?
Boy, we've got you covered, right?
Referral Cloud.
Referral Cloud, yeah. So we have a network of agents all over the country, and they'll do a great job for you. Please reach out to us, and we'll connect you with a great agent, and they'll help you sell a property, buy a property, whatever real estate transaction you want to do. We'll go ahead and help you get that accomplished.
All right. Like I said, in a week we're going to do an update just on the condos. We're going to go through the exact same data, but we're going to only talk about condos, and because that is a sub-market, and you're going to be surprised when you see that it hasn't really been affected like the regular market's been affected. Thanks for tuning in. Please subscribe, give us a thumbs up, hit the notification bell, and leave us your comment, because we like to read them and we respond to all of them.
And we do.
We do. All right.
We'll see you on the next video. Bye.
Bye.